Welcome to today's class for corporate accounting. This is the chapter called Alteration of Capital, and we have taken the problem number 3 from Jain and Narang textbook. See, in this we are given with one balance sheet and various scheme of adjustments are available. Number 1 is preference shares are reduced. 100 rupee is the face value, now it is reduced to 75. Equity shares 100 rupees is the face value, now it is reduced to 40. Then debenture holders took over stock and debtors in full satisfaction. Please mind that in full satisfaction. So there is no lesser amount considered for the stock and debtors. The full value is adjusted against the debentures. Then fictitious assets and intangible assets are eliminated. What is the meaning for that? It is fully wiped off and written off. And land and building appreciated by 30%. Existing value of land and building, which was 3 lakhs, 30% plus 30%. So 90,000 is taken, 3 lakh 90,000. Then expenses on reconstruction. That amount of 4,500 the company has to pay. Okay. So for that also we have to pass the entry. Then capital reduction is utilized for adjusting various assets mentioned in the scheme of reconstruction. Let us take one by one. Preference shares. 3,000 shares are given at the rate of 100 rupees each. Now it is changed as reduced to 75 rupees each. So you apply it 3,000 into 75. Then another one is equity shares. 6,000 shares are available, 100 rupees each. This is also changed as 40 rupees, reduced by 40. So what we have to do is reduce it to 40. So 6,000 into 60 rupees each is taken as the capital reduction. 40 rupees per share is the equity share capital. And another one is debenture holders. They are taking over stock and debtors with in full satisfaction of their clients. So debit what the amount of debenture is given, stock and debtors, still you are having the balance in debenture, that one is taken as capital reduction. Land and building is appreciated. So debit land and building, appreciated in the sense your value is increasing. Land and building is a asset item. So debit asset, credit capital reduction. Then payment of expenses. Simple expenses account data to bank. The next one is adjustment of assets against the capital reduction. We are given with the point in the scheme that fictitious and intangible assets are eliminated. That means debit capital reduction. What are all the available assets to be eliminated given in the old balance sheet? Goodwill, surplus, preliminary expenses, machinery, reconstruction expenses. Right? Of course, the reconstruction expenses is not given in the old balance sheet. We are given with the adjustment. So based on that, we are taking that 4,500. Then these things are adjusted. Still, we have some balance in the capital reduction. So that amount is taken as capital reserve. So because we should not leave the balance in capital reduction account for the new balance sheet. So that amount is taken as 3,000 as capital reserve. Then after this, we have to prepare the balance sheet, and in this balance sheet, we have to take the assets. What are all the assets we have to take? Please keep in mind, in existing balance sheet, some of the assets are eliminated. So what are all the available balances? Only those things we should take. Land and building, existing balance 3 lakhs, 30% is appreciation. So 3 lakh 90,000 we have to take. Then machinery, 4 lakh 50,000 existing value. On that amount is depreciated, right? Balance is 3 lakh rupees. Then for current assets, we are given with the cash balance. Debtors and stock are adjusted against the debenture, so that should not be considered. Cash balance total 7,500. Of that, reconstruction expenses 4,500 paid. So balance amount available in current asset is 3,000 only. This is a cash balance, right? Cash or bank balance that we have shown here. Then another item is surplus. It is eliminated. Then preliminary expenses, that is also eliminated. Coming to the liability side. First, 3000 5% preference shares at a rate of 100 rupees each, whereas as per point number 1, it is changed, right? So, 75 rupees each. Now the face value is 75 only. So, 3000 into 75. Okay. Then, another one is, the next point is 6000 rupees equity shares of rupees 100 each. Now it is reduced as 40 rupees each. So we are taking it 6000 shares at the rate of 40 rupees. Then capital reserve, we got the balance in capital reduction account. So that capital reserve 3000 we are taking it under the category called reserves and surplus. Then coming to the current liabilities, the amount of current liability available here is 75. There is no point given for that. So straight away we are taking current creditors. Then bank overdraft also taken in the new balance sheet straight away. No adjustment is given for that. So these are the things. Now the balance sheet got tallied. So in this, what is the new point here in this problem? Two categories of shares are given. Both the shares are prices are changed. So we have to ascertain what is the new price. Then important point is some current assets are eliminated, not eliminated, adjusted against the debentures. So for that we have to pass the entry number 1. Fixed assets got, one item of a fixed asset got appreciated. It is adjusted against capital reduction. Then another one item of a fixed asset, that is a machinery, it is depreciated, that is also adjusted against capital reduction. Then reconstruction expenses is given, that should be paid off. Balance of cash is taken in the new balance sheet. And lastly, that capital reduction is utilized for adjusting the fixed assets and the other fictitious assets and other intangible assets. Though we call it as the capital reduction is used for fictitious assets, but I pass the entry for machinery also, it is taken for adjusting the capital reduction. Okay, so in this way we have to prepare this. You please put a mark on this problem. This is another one important suggested problem for examination under section C.